Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on March the 16th, 2020 with a daily Forex market and live trading analysis for you. And we have a lot to cover today with considering all the volatility and craziness that's going on with the coronavirus. It's just, yeah, it's absolutely nuts. The U.S. Federal Reserve cut the interest rate by a full point overnight on Sunday and sent the markets into a tizzy right off the bat. So before we get into everything, let's just get to our disclaimer real quick. And this is to remind you once again that this webinar is for illustrative and educational purposes only. That is it. Any of the examples that we have that we are using and showing are all just for educational purposes only. If you're not part of our signal system service where your trades are following our trades and as we do make changes and stuff like that, then you shouldn't try and copy anything you see in these videos because this video is delayed. So you are always in the past, so you wouldn't be knowing exactly what our position is at or any type of altering that we do with stops and projections and whatever, or even getting out of trades. So just as a reminder, once again, this is for educational purposes only. And with that, we're going to go to our live screen real quick. We are at the Forex-Trading-Unlocked.com workstation page, and we already have the US dollar Turkish lira page up. Now, why did we start with this? Well, we're going to try to get a gauge on how much volatility we really have in the US dollar and strength. Well, obviously, as you can see, the US dollar Turkish lira has had quite some range today and has blasted into higher move high territory. This market is not for the faint of heart, but this is definitely showing that dollar strength is very, very strong in this market. So we see the volatility is here. You can see there was a lot of market action. Now the spread getting in and out of this trade is pretty wide, so unless you have deep pockets and you're a very experienced trader, I would say be careful trying to ride this bull, because you gotta have you gotta really have some wide stops, or have already been long in this trade from a long time ago. But what a rally we've seen just in the month of March alone. So here we are halfway through the month, and we had a significant little correction here that happened only over a course of a couple days, and then shabam, look at this rally that we've had over the past 2 weeks. So we have dollar strength showing its head there. Now we're going to go to the US dollar Mexican peso, and once again we're going over our lesser currency crosses to try and gauge the volatility and strength of the dollar. We know the dollar has been very strong for the last few sessions. Now let's see what happens with what's going on here. Now the peso has had quite the range. You can see that we have our pivot here from yesterday's or Friday's session rather, that low as our support base. We came just above that and then bounced. So, and right now the market, as you can see, is trading at basically 22.5 pesos. It touched over 23 to the dollar earlier today, and we're expecting this bull to probably maintain its posture. Now I think for this market, it's very possible that the US dollar Mexican peso may be running out of gas. But then who knows? There's a potential travel ban on US people coming to Mexico, so that's another thing that could hurt the Mexican economy, because we know that the tourism is very heavily reliant, especially from at this time of year, from Americans, because you have all the college kids. So we'll see what's going on with this. This market also is not for the faint of heart. It's very swinging around radically. So unless you're already in this rally and holding on to this bull, and I'd be careful anything below 21 pesos, 21.37 here where our pivot is. Any trading below that probably will have this in negative territory for a little while. So once again, dollar strength in this market is very strong. Now we're going to go to the US dollar Canada, north of the border here in the US, and see how this market has been hanging out. Well, this market definitely has been all over the board today. It hasn't made a higher move high from Friday, but it did take out Friday's low. But look at where you can see that now it's at the upper end of its range, and it is positive on the day. So US dollar strength is also showing its head here, and this is kind of important to see if it can make new highs today or into tomorrow, because we have this gap down here. So is dollar weakness going to rear its head? Well, right now, like we said, we have upside momentum for the US dollar bulls going very strong in your lesser currency crosses. So now that we've gone to the lessers, let's go over to around Asia and see how the Australian dollar, US dollar is shaping up. Now, this market has just been getting hammered over the past I would say, few weeks, let alone the past couple days. Last week we had one of the biggest down moves that you can see on this chart, obviously anywhere. And then we had that one Monday where we had, I mean, this range here was ridiculous the way that was. So today wasn't quite the same thing as that day, but whatever. We have still made newer move lows. You can see the market was higher today. I mean, it's had quite a range. It was just above, what was it, 63 cents here? So yeah, the high was 63.02. The low is 60.78. So this is a big range for what's gone on with the trading in this market so far for the day. Now we are noticing that it's back on support, and it's trading right around the lows from Friday. So as long as we're hovering around those lows or beneath Friday's low, I would say that this market most likely is going to keep on pile driving lower. Now it may be a grind lower. You can see how it tried to rally, and we've had quite a range today, but not much as far as making new or move lows. Even Friday's low didn't take out the low from the previous day by very much. Of course, with the momentum from just that one session on Thursday, it's any wonder, right? I mean, with the way that pounded the Australian dollar, US dollar. So right now we're still seeing dollar strength also. Now this is one of our bigger currency crosses. Now New Zealand dollar, this is also in that trading zone. So let's see how the New Zealand dollar, US dollar is shaping up right now. Now this one also has been in a very bearish way versus the dollar for the last few weeks. And the thing is that it doesn't have quite the problems that Australia has because they didn't have wildfires. But the coronavirus obviously is an impact on a country as small as this. So it's right now the question is how devastating of a bear can this market really be? I mean, this market was a really strong bull going into the 2019's end. And then since the first trading day of the year on January 2nd, this market has been lower, and for the most part, except for this one correction here, has been only had a few up days so far this year. And we are coming towards the end of the first quarter. Now today, unlike the Australian dollar, this one has planted the new lower move low, and we'll see if it actually can hold and stay positive. So this could just be a little bit of profit taking considering how much lower this market has been over the past few sessions. And also maybe it is time for the dollar to get a little bit of a bounce in the other direction. But right now, US dollar is still showing strength. This is the first one that we're looking at where the dollar is actually coming back a little bit. So now let's go to the big currency that is in this area of the world. We're going to go to the US dollar, Japanese yen. So now we're going to start to get into the flight to quality currencies and the strong currencies around in the dollar index. The US dollar, Japanese yen, talk about a market that's been swinging around. I mean, last week we saw moves that you just don't see these things, you know. It's just kind of crazy how the rally that happened last week off of the low is just so extreme, and the volatility factor too. I mean, look at these ranges here. I mean, I have the the downside pivot here at 103.09 and the upside breakout pivot of 108.52. I mean, this thing is so wide, and this is just from 2 days of trading. So it's not like this is something that was formed over the course of a couple weeks or something or anything like that, you know. So it's really, really, I don't know. This is going to be a tough gauge to see how this one goes. So dollar strength right now is not showing its head in the Japanese yen. So we have the New Zealand dollar and the Japanese yen that are only two bulls that we've found so far. Now remember, we started out in the lesser currency crosses, so it's probably just because of the fact that they're smaller economies and not as significant. I mean, they're still big currencies, and as far as the world is concerned, but relative to the ones we're talking about now, it's much different. Now, this central bank of Japan did make an announcement today, and there's some things that they are working on, and it looks like they're going to do some things to prop up the debt market a little bit in Japan. But they're not doing stuff like the U.S. Federal Reserve did overnight with the 1 point move and stuff like that. So we're going to have to see how they react to things. They are taking a much slower approach, which seems to be the way they've been holding anyhow for the past like few years. Like as we've been riding the new highs and stuff with the market and things like that. You got to remember that the Japanese had a big crash back in the 90s. Like they've lived through all this stuff, and they had negative interest rates. So like they've already been here, you know. So now this being compounded by a world epidemic and at least we know that the financial system is still strong. Companies, even though they may be losing profits and definitely are going to be slower for the course of this year. I mean, certain companies are booming off the charts. But any slowdown on most companies that are solid brands and have solid businesses are going to be fine in the long run. It's just right now in the short run, yeah, there's a lot of things that are on pause, you know. So, and the question is how long will it last? Well, nobody has the solution or the answer to that one at all, you know, but the good thing is that the whole world right now is working together. So there will be aftermath. This thing isn't going away in a week or two. Hopefully it does start to curtail within the next couple of weeks or a month or so. I mean, but right now they're pushing things out now for the next couple of months. I mean, you have New York City that just closed its schools till April 20th, I believe it is. It's far into, you know, I'm in Chicago and they just closed schools for 2 weeks. But now you've got the state of New York where all schools are closed until like sometime towards the end of April. So I don't want to be quoted on the actual date, but I know it's definitely further into it's more than a month. So we shall see. Right now, the markets, obviously the Dow has been lower this morning starting out. As far as what happens with the U.S. dollar, like I said, we've seen that it's strong. I mean, here's the one thing you have to look at, even in the yen that it's lower in right now. It's trading in the upper part of its range right now. So the question is this going to stay where it's at now? No, of course it's not. Is it going to make a run for higher move highs? Well, we have been making higher move highs and higher move lows. So the question is, which one will it do? Well, we're closer to 108.52 for a breakout than we are going back down here. And if U.S. dollar strength is here as well, then the bulls have probably a very good chance at making a run at 108.52. Any breach of this area then I think really has this market going in a big way for rally mode. So be cautious either way. I mean, right now, we could easily come back down to 103, find some support, and then bounce back. I mean, the question is this market a bear or is it a bull? We don't know yet. We have to see. That's the biggest question is are we going to take out this lower pivot, which we could confirm being a big bear? Or are we going to take out this upside pivot here, confirming strength and bringing back the U.S. dollar, Japanese yen bull? So we'll see. We have to watch this one. If you're already in this trade, if you're a bull, I think you got a good shot, but I would be very cautious of trying to buy into this right now. You could take a lot of heat. This is definitely the volatility factor in the yen is crazy right now. So you really, really have to be mindful of that for any of the trading in any of the Forex markets right now. So we will see how this pans out as the course of the day goes on. We have to have all the reactions to what central bank stuff has happened over in the past 24 hours. I mean, you got to realize it hasn't been 24 hours that the U.S. Fed cut the discount rate down to a quarter of a percent. A full percentage point was cut. We have the Bank of Japan that says they're going to do some QE buying and stuff. So there's a lot of things for the world to digest. But dollar strength still seems to be the thing that's going on. Now let's take a look at one of the biggest currencies in the dollar index, the British pound US dollar. Now the British pound US dollar has been in a slow grinding bearish way for the past couple months, as you can see here, but it came off of this high recently, and last week this market has not seen volatility like this in a long time. Right now we're trading at $1.2302. The market made lower move lows, but is positive on the day right now, trading in the lower part of its range. But look at it's down a full $10 in just a week. That's a very, very large move, showing weakness in the pound versus the dollar, obviously. and strengthen the dollar. So the question is are we going to get a bounce in the pound US dollar? Odds are we are at some time, and now would be a good time to get a little correction. But right now we have coming off of a big drastic lower move low, and we just have to see is it going to continue to pound support or not. So right now, if you're a bear, I would start to tighten up your stops and look for an upside correction. I mean, you always have corrections in every move, whether it's up or down. But I would not try and catch a falling knife right here because we're trading back in territory where we hadn't been since, let's see, this is October the 10th. So we're looking at 4 months, or 5 months actually. So that's pretty crazy and we've gone from the almost upper part of the trading range for the last 5 months all the way down here within the period of a week. So that momentum and that volatility is something you need to be mindful of. Dollar strength is getting stretched, So in fact, what we can do is we'll pull up the dollar index real quick. As you can see how Friday this market had exploded to new move highs, and is still strong today. So is it running out of gas? Well, just look at this move. I mean, this market turned around in a week and just absorbed all of this volatility. Of course, markets go out like they come in. That's how this thing started. We had a nice inverse reflection. Now the question is it going to run out of gas? We can see with the pound US dollar that it's trying to put the brakes on it. So let's look at the US dollar Swiss. Now the US dollar Swiss, here's another market that the Swiss is a bull versus most currencies globally, but with what's going on in Europe, it's very hard to be a bull here. So we'll just have to see how this goes. The U.S. dollar right now is showing a little weakness versus the Swiss. It didn't make a higher move high today, but you can see that it's still in the upper part of its range. So as far as the Swiss were still bullish in most currencies, but as far as with the dollar, I think that we're currently in a corrective move. I think that it's going to be tough for the U.S. dollar to blast through higher move highs with this market, in the overall grand scheme of things, but we still probably can push this up towards 97, 98. This market, the U.S. dollar has trouble with the Swiss franc once it gets to parity no matter what. But as far as showing strength and as far as a reserve currency, the dollar seems to be definitely where the world is turning to. And we don't know what's going to go on obviously, but we know that the volatility is here with what's going on in the stock markets. I mean, the volatility in the Dow and I mean, what was it, last Thursday we had the largest down day in the S&P 500 since and also the Dow since the crash of 1987 when the Black Monday had occurred. So these are things that we are living with right now, and there's a lot of sensationalizing going on. We just have to watch the numbers and hope that they are closer than further away from finding a vaccine and treatments and, finding a way to slow things down. But it seems like the world is coming together at least on to try and quarantine and keep the spread of this virus from going any further than it obviously is entrenched itself. So hopefully things are going in the better way. This market here is still in a corrective bullish phase because U.S. dollar strength seems to be prevailing. Obviously today the market is slightly lower, but if you look at it, it opened up higher than it closed on Friday, and it's just slightly lower on the day. So trading in the upper half of its trading range from today. This market has continued to make higher move highs and higher move lows. So I would be, obviously, if we head back down towards today's low, I think that would be right here would be your main pivot for a risk. Like if you're a bull right now, I would say that anything below 93.89 puts you in a bad way testing support, or at least this market could start to go into a grind sideways where it's just going to chop around. So range traders, I think, selling into new highs and buying into newer move lows, you might have some good opportunities. Bulls, I'd be very careful, like I said, of being long anything below 93.89, and any breach of 95.72 has this market targeting the 97 to 97.5 area. So we have a potential for still a nice little rally in this market. So US dollar showing a little weakness now in the bigger currency crosses, and now we're ending with the Euro US dollar, the big dog in the dollar index. This one's just slightly bigger than the pound is as far as global currency crosses, and as you can see, this one has had quite the range today. So the Euro US dollar is trading in the lower part of its range. It did not make a lower move low, so we're using the low from Friday as our aggressive bull risk parameter. Anything below here, we're looking for this market to continue back down towards this 109 area, maybe even as far as 108.70. So I mean, with this volatility, that could happen just today alone. I mean, this is crazy what's going on. So just to give you an idea, today's range, the high is 112.36 and the low is 110.65. So we're getting some really, really good ranges. I mean, we have a $1.50 range in the euro on a day where we've had, well, we had lots of central bank action right as the markets opened yesterday, last night, on Sunday. So very Volcker-esque, and if anyone has been trading very long, they would remember the days of Volcker when the Fed would just come out at any time and raise or cut the discount rate. And the irony is that the Fed could have waited till the meeting. I mean, we should be digesting. I mean, a couple days here and there of the swinging of the markets isn't going to make a difference whether the Fed did or didn't cut the rate like they did. In fact, I'm surprised that they didn't do it slower and just wait till the meeting, do a half, and then wait maybe another couple weeks and do another half and show that they're not panicking. This is before it was preemptive, you know, when they cut the rate last on a Tuesday 2 weeks ago. Yeah, we're going on. Yeah, tomorrow will be 2 weeks since they cut the rate a half a point out of the blue. Towards I remember I was having lunch down at the Board of Trade, and we were just like, oh my gosh, this is unreal, what's going on? And now here on a Sunday they do it. So it's kind of crazy that these guys in front of the market opening would do that. So without any, you know, I mean, obviously it's not a forewarning thing for them to do something like this, but usually you would think that you would wait until the markets are actually open, you know, before you would do that. Because the weekend thing is just not fair to the whole world. So, but whatever, in their grand scheme of thing, maybe that was to get their attention because that was when Asia was coming online. Maybe they did it because they're like, well, the markets are opening. We know that the rest of the world is going to be able to start dealing with this right away. And obviously, since it's a Sunday night, you know, the nighttime night desks are already open, so there's trading already going on here. So here we have, like I said, 110.54 here is our aggressive buy risk pivot. Anything above here, you can look for a potential upside correction. Now, this market had been in a very short-term bull. I mean, it was a sideways bear for a while until the middle of February, obviously, and we had this screaming rally back up. I mean, we had more of a move in from this low to this high in just a few weeks than we've had in a year and a half in this market. So for this to come back from, you know, 114 back down to 110, well, this is, you know, a little bit more than a 50% retracement. Now, this is right now where it's trading. This is where we have as our downside. This was a sell signal here, a bearish engulfing line, and we hit the lower parameter of this on Friday and Thursday. So, and today we traded right above it, and that's why we're saying here is our risk parameter for longs, 110.54. If we pile drive through that, that was the extreme target for our sell signal. So anything that has managed to hang around here, and if it can batter support again, then the odds are this is going to be a short that's going to bring you back down to the 109 to 10 upper 108 handle. So, and that's even if this market is an overall bull, you know. So we'll have to see how this manifests. I would say if you're a short, like today, look at today's range. We took out the high from Friday. The high from today, I would say, is your short-term bearish pivot. Any trading below here, you can look for an aggressive sell, trying to trigger off, you know, some support stops here, which may happen. But if we get above today's high, especially today, then that bullish momentum probably confirms the fact that this is a higher move low, and we are definitely going to be targeting this 113 to 114 area once again. And with the volatility that we're having here, I mean, this market's having upwards of $3 swings, you know, so within a couple days. So, I mean, this volatility is, just be mindful of it, being long and short. I mean, you're going to have to widen your risk parameters, but be very disciplined about them, because we can very easily be blowing through this. Like today, if we were to take out the high and rally above this 112.42 area, we could easily be pressing 114 by the end of the day, so, and that's just what's going on in the market today. So these are things you have to be very mindful. We don't have any real signals going on right now. We have to wait. We have to wait. I mean, we have been sitting on a couple positions going into this trade, and it's we have, let's see, we had positions on. We have one in the euro, we have one in the Swiss, and then we also have one in the Canada. So we will wait to see how these manifest, and we will, these are trades that we had on from last week. So we're gonna we have nothing to go except to ride these levels. So we can check this out like this, and okay, here we have our live account on the MT4 platform, as you can see. And in fact, one of the best ways to look at this is to do this, because you can see from how our signal is tracked. Instead of looking at the MT4 platform, this is clearer visually. Okay, so we can see we have a long of the US dollar Swiss, a short of the euro US dollar, and a long of the US dollar Canada. Right now it's pretty much flat between the three positions. We've had quite some volatility off of the last week and a half with these swings between the market openings on between Friday's closes to Sunday evening's openings. Every position we've had has some drastic swings. The good thing is that we've had profitable positions that we had such a wide range that we still were profitable when they got stopped out last night, right after we had the 1 point move, of all things, on a Sunday. So great way to start the week off, the last two Sundays, I'll tell you what. So not for the faint of heart. So here are the positions that we have in right now. Remember, these are positions that we already have entered. You can see. So these are things you should not copy. This is something you can watch. You can also track us, through this is why I pulled this up through the MQL5 website. You can track Forex Trading Unlocked and how we perform. And then you can see when we have positions. The only thing is this is also in delay, so you don't know when we put them on. You can refresh your thing and then say, oh, there's a position. You'll see parameters, but you don't know when we change them, because this thing doesn't just refresh on its own, and we can change things on a dime. We have things, we're monitoring trades. You're not in them. You're not the ones managing them, so do not try and copy them. So anyhow, as you can see on the day right now, for our example account, this is live trading too. Obviously, it's very small, but that's because we're showing live trading, and these are actual trades that are executed and can be copied through our signal service. So that will be open to the public in the not too distant future. So, but right now we're just in the tracking stage, because that's what we want you to see, and we will then get into the release actually probably within the next couple weeks. So, and then people can start. There are people who are already following our trades, but those are proprietary customers, and we are now going to be releasing it to where anyone can do it. So you can, doesn't matter, you're being full control over your own brokerage account. We don't touch it. We have nothing to do with it. We don't care who you do use. You just can broker connect into the trading signal, and then you can manage and either do it at the level like we are here, or at a bigger level. When we do have it released to the public, that's when we will have the parameters that are necessary to trade and maintain your balance properly for this methodology. So, because you don't want to have too little in your account and then all of a sudden be like, oh my gosh, how did we not absorb that equity swing? But it shows here the stats and their trades are plugging away and doing okay. So these are things you have to be mindful of. So we have, once again, we are long the US dollar Swiss, we are short the euro US dollar, and we are long the US dollar Canada. So as you can see, they are slightly profitable right now, and we will have to see how they manifest over the course of the rest of the trading week. Right now we are kind of quiet. It's kind of amazing. The stock market's been open now for 2 hours, and all of a sudden it's settled down into this kind of quiet mode. It just is just ticking along. I think maybe the whole world, maybe everyone's like, hey, it's time for lunch, as the European markets are closing down and Asia's closed. maybe now, since it's just a U.S. trade, everything's so bonkers, and everyone's, I think, trying to figure out. I mean, when was the last time, I mean, the Fed has done 2 rate cuts in less than 2 weeks, so in a week and a half, and a point and a half altogether. That's just such a drastic move. I mean, talk about, I mean, these openings that we've had from Friday to Sunday on for the currency markets, let alone the equity markets and the futures markets and stuff. This is interesting times that we have for the whole world, and especially if you're a trader. Volatility is here, so opportunities, if you're mindful and disciplined with your risk, you will be able to catch these swings and have some very, very nice profitable moves, but you have to be mindful of your risk. And be very disciplined, because with this volatility, it's so easy to get stopped out, and just lose unnecessarily because you're just trading or just guessing, and you don't want to be doing that. Always have a plan, have a method, and have your risk parameters set, where you put your stops in and your targets, and know how to manage them ahead of time, and then stick to your plan. Win or lose, stick to your plan. Always stick to your plan. If you start to get subjective, things go bad. That's just for sure. So now, if you want to know when to start buying and selling some of these currencies, then you can read a book called High Probable Japanese Candlestick Patterns, available on Amazon.com on Kindle and paperback versions. This book is usable for Forex traders, futures traders, options traders, binary options traders, equity traders. If it's a market, you can use these patterns. They've been used, and they are the best buy and sell patterns used for over 400 years, where you can give yourself a competitive edge against the markets. Right now, we have used some of these signals that got us into the trades going into where we're at. Now they've manifested themselves, and we're already there, so now we have to wait and see what happens with them. So we are waiting for new signals, and we're working trades that we've already had on. So, and with this volatility, once we either are going to get stopped out because of the risk, or we've made enough on this trade, or we will keep riding the profits and see how far this trend will take us. Because right now, like I said, with this momentum, or the momentum capabilities that we have in those markets, if you're on any trade right now that's on the right side, and you give it just a little bit of time, these things aren't happening in days. These things are happening in hours. So it's not like you have to have a lot of patience. So for the impatient trader right now, at least if you are disciplined, I think you should be really happy. So, and once again, remember that we are looking at the dollar to be the premier bull right now around the globe, and it seems like the stronger currencies are in the short run intraday right now trying to turn the dollar around, but if anything, it could just be profit taking before we get the next slam of support. So just remember that, and be mindful of what's going on with the markets. And after that, we're all done. I want to thank you very much. Please check us out all the time at forex-trading-unlocked.com, and subscribe to our YouTube channel, and keep following us. And hopefully we're helping to educate you on the Forex markets, and helping to raise your bottom line, and especially help you to curb your losses, which will improve your bottom line no matter what. Have a good day.